All right, we're doing Broadcom, we said?
Broadcom, yep.
Yeah, Broadcom. And we talked when we picked this one for today, I said the symbol, AVGO. And do you remember where that came? We probably don't. I'm probably putting you on the spot here.
Yeah, you did. I'll have that answer for you by the time it comes to me.
Let me get into it a little bit. Again, Broadcom, symbol AVGO in the semiconductor industry. Not much short on it, 1%, 80% institutional owned. PE ratio, 91.9 versus 57.2. I know the stock has had a big run up here. Price to sales, 29.1 versus 13.4. Price to book value of 23 versus 11.5. And then we do see price to cash flow, 68.6 versus 36.3. PEG ratio, about the only thing that I can say looks halfway decent at 4.6 versus 16.8 for the industry. But very expensive right now is Broadcom. Let's see what they're doing. Their earnings, well, they were up 121% over last year, about 3 times the industry at 47%. We do see sales climb by 21.9%, not as good as the industry growth. It's 64.3. They do have a 5-year estimated growth from the analysts of 11.1, industry at 28.5. So again, kind of question that high valuation it's getting. Could be that's just kind of happened, so everybody's excited about it, pushing it up. They only pay a 0.7% dividend. And I'm looking close at that because it says it's 81.3% of their earnings. The payout ratio, 81.3%. That means they don't have much in earnings. That's kind of strange.
It's got to be write-offs or something.
Something there, yeah. 'Cause that's not a good payout ratio. We do see that on the balance sheet. Current ratio 1.1 versus 3.2. Debt to equity is 1 versus 0.3. And a net profit margin 22.6 versus 23.6. Return on equity 18.6, well below the industry at 58.5. And cash flow, $22.6 billion, industry at $43 billion. Chase, what do you got going forward?
Yeah, so go back to your initial question there for Broadcom, their ticker symbol AVGO. The reason for that is in 2016, the company AVGO Technologies acquired the original Broadcom. They kept the Broadcom name, but then they also they changed to Broadcom, but they kept the AVGO ticker symbol like the original AVGO company.
I wonder why they would do that. That's kind of strange.
Yeah, I'm not sure either. Yeah, I mean, it's like you're changing the name, so why not change the symbol? And I was kind of surprised when you're going through some stuff. You know, I was thinking about Broadcom, and I will say one thing that they've done a great job of, so far at least, is integrating different companies. Because, I talked about that 2016 acquisition. That was, I think it was like in January 2016, AVGO Technologies acquired Broadcom for $37 billion. That kind of kickstarted things. In 2018, they acquired California Technologies for $18.9 billion. Then Symantec's enterprise security business in 2019 for $10.7 billion. Then they also acquired this company Brocade in 2016 for $5.9 billion. And then the big one was VMware in 2023 for $69 billion. I mean, a lot of times companies, when they're doing acquisitions to this scale, it's very hard to integrate, and a lot of times it leads to, I think, more difficulties. But I give them credit, I guess, so far that they've been able to integrate them pretty well and have a successful business. But looking at the numbers here for Broadcom, ticker symbol again, AVGO, $359.87, 52-week range. I mean, this thing has just been dominant. 52-week low, $138.10 in the high, $374.23. We go out to October 2026. I see estimated earnings.
Wait. Did you give the 10-year return? Did you see the 10-year?
No, I did not get the 10-year. What is it?
3,515%. I just couldn't let that slide. I'm sorry.
Yeah, I think it's not quite NVIDIA status, but obviously it's up there. But looking at the, again, forward basis, so go out to October 2026, estimated earnings per share, $9.18. Gives you a target sell price of $152.39. Obviously below that current level, and it trades at, about 40 times those future earnings. And the company reported earnings last week, and the excitement wasn't necessarily around the outcome of the earnings and the sales or the guidance, but the excitement came around the fact that they said on the earnings call it secured a new $10 billion customer, and analysts are believing that is going to be OpenAI.
And now, didn't I see that there's a little bit of competition maybe for NVIDIA for what they're kind of saying on Broadcom?
Yeah, I mean, this is kind of
Or
where
was that
Broadcom.
Oracle had a big news too.
Yeah, I mean, I figured we might look at Oracle next week just
Yeah.
because it was so crazy. I mean, Larry Ellison gained like $100 billion in net worth in one day. But I mean, Broadcom's interesting because, you have CPUs, GPUs, and Broadcom has this thing that they call XPUs, which is custom artificial intelligence chips. And what people are maybe speculating here is that OpenAI and Broadcom are co-designing a chip that will hit the market next year. So rather than buying NVIDIA chips, is OpenAI working with Broadcom to create their own? And supposedly Broadcom has other customers for their XPUs, which includes Google, Meta, and then TikTok parent ByteDance.
Which one? ByteDance?
ByteDance.
Oh, wow.
Which owns TikTok.
TikTok, yeah.
So, it's an interesting thing is, will Broadcom be taking market share from NVIDIA? I mean, I don't, again, understand enough about this chip making space. I don't know what the heck an XPU is versus a GPU. But gosh, I mean, it seems like obviously people want to be in this space because you got, again, Microsoft, Meta, Google spending the $100 billion that we talked about. Broadcom's probably saying, well, we want some of that. We don't want it all to go to NVIDIA. Yeah. So, I mean, I don't know. I think there is some potential merit for Broadcom to see growth in their earnings and growth in sales, but it's high risk, obviously, trading at 40 times those future earnings.
Yeah, and we kind of talked about NVIDIA in the first half of the show about the competition. I mean, here's a good example of what's Broadcom doing? What is Oracle doing? I mean, everybody's trying to get part of that. So, as we said, there'll be probably one or two winners, but there's a lot of competition there. And just because it reminds you so much of the .com. If you had .com behind any company, it would go up. Right now, if they do anything with AI, it's going to go up dramatically. And some of these will be winners, but you just don't know which ones.
Well, and there's different levels, right? Like we talked earlier in the show about, they call them the hyperscalers, or, you talk the chatbots. I mean, basically you have your chatbots. Then you have your hyperscalers, which are kind of providing these data centers. Yep. And then you have the chip companies that are providing chips for the data centers. I mean, there's going to be winners at each level. But again, as we kind of said, it's just so hard to pick the right winners this early in the game.
And this is like, if you invest in them, hopefully you hit the home run. But there's a lot of risk in here. And you might, good example was Lululemon. We talked earlier in the show. It was up to $500 now. So what, $150 or something? Because that excitement went away.
And the business, as you said, is not a bad business anymore. It's just not as exciting as it once was. And that's what people miss a lot of times. It's like, well, Broadcom's not going to go away. It's like, that's correct. But if it gets less exciting, that's where you can have a Lululemon type event where it falls 50%.
And you just said something that I try to tell investors, don't say stuff like that. What is it that you said? They say, it won't go away. Yeah. It won't go away, but the valuation can change and the game can change. And that's what you have to understand with investing. That's why we don't buy these high flyers. And we always say, congratulations, you bought NVIDIA 10 years ago, congratulations. But that's the exception, not the rule. We like to invest in companies that we know what we're paying for and what we're getting for that company.